Good day. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Tuesday. And we're at October 3rd, 2023. Dysfunction. Yep, that's the key word. And it's finally spilled over and grabbing hold. And it's been doing it for a few days, but it's like getting to an apex right now. We're hearing outlandish calls for interest rates. Rick Santelli, 13.5% on the 10-year notes, just so you know. I'm not certain I know where that's coming from, but anything can happen if he knows something we don't know. Kevin McCarthy lost the House speakership. I don't know who's going to be the next House Speaker, but here's what you can be guaranteed. Who's going to pull this all together in 45 days? Or does it mean that we're going to be going through another 45 and then another 45? How do you fund Ukraine? I was showing tonight in my full research just how much money Ukraine counts on the U.S. for. Forget the armaments, because that's what you read in the paper. Do you know how many teachers, civil servants, everything we directly pay for? Our neighbors help too, our allies there. But my God, it's insane. I didn't realize the vast amount of money. And how dare Ukraine then criticize Poland for them not wanting Ukraine to dump the grain in there? I mean, at what point do you tell the guy you're helping, hey, be grateful? Something not right here that I don't get. And I really tried. I read a lot today on it, didn't get it. So what is finally happening? Present tense, not happened. Present tense, happening, is that the market has come to realize that, number one, it's every day billions upon billions that the U.S. Treasury is putting out there and sucking out of the market at higher and higher rates to attract buyers. At the same time, the Fed is running off their balance sheet, not buying back what they've got. That's not offering any support to the market. Some foreign buyers, probably China, not doing as much buying as you thought. We never quite know the numbers, but that's my guess given the slowdown in their economy. And we know that there's not quite the appetite in Japan to keep buying our debt the way that it was. Now, you can go out today and get 5.6% almost easily in Treasury bills, whatever. Just think about that number. And I know what you're going to tell me. If I park my money in that IRA, the market's going to go back up. And history shows I can make more in the stock market than parking the money in bonds and bills. Absolutely correct analysis on your part. 100% correct. It's all about timing. For 4 weeks, for 8 weeks, 12 weeks at a time, come on. You don't take all your money, but that's certainly going to cushion your blows on other things. And that's something I have been saying on my TV appearances and so on a good part of this year. Certainly in Australia, I've been all over the air saying this over and over, that that's one of the things I think. So what does it do for the metals? It's not a friendly part. All right, because as the dollar goes up, you're sitting here near the 107 mark now. You crossed it today. That's a headwind. Gold is priced in dollars. It's not friendly, any of these. And as interest rates keep going up, you go, well, why should I buy gold? Then you say to yourself, okay, I want to own gold in times of dire distress. We're not there. And you're going to say, Ira, what are you talking about? The stock market's given back all the gains in the Dow Jones for the whole year as of today. And here's what I'm saying. As long as the labor market is as strong as the numbers keep showing, you're not there. People have jobs. The labor turnover, the people turning over are doing it because they've already got another job. And the amount of jobs, the JOLTS report today went up. People need to hire more people. That is not something I expected. I doubt the Fed expected it. I looked at the number and I kept going, I'm reading a digit wrong. And that's where you're at. So when you look at the gold market, again, the market failed on a retest of the 18-day average of closes. The market has slipped back now from 2024.80 to 1824.60, a $200 an ounce drop. It has been literally straight down, and it is overdone. That does not mean it's bouncing up here. That's not what I'm saying. It's going to move to the right-hand side of the Bollinger Band, in my opinion, because every day is had a lower low. You realize that not one day have we taken out the prior day's high since this whole thing began all the way back here, and that's almost 2 weeks now. When we take a look at moving averages, again, I pointed out yesterday, the short term, the medium 100 and the 200, a complete bearish setup. Analysts that follow moving averages, they jump on that. They look at it and they go, that's very bearish setup. And last, the Bollinger Band. Now, we ended up with 6 days in a row. It's super rare that you go beyond 5. I define you to go on your charts, all of them on lead months, and find me 5 that you can get, make it 6, make it 7 in a year, out of all the charts you do. So, there's 12 months to the year. Not every market has a trading month, but if you go through them, you're going to be shocked at how few you see. That is a sign of weakness. It is not a sign that the market is overdone. It is a sign that on bounces, there'll be some good selling. People are caught in this market, and you have an embedded reading to boot. So therefore, on good hard rallies, I expect to see the pros selling, not buying in this market. When we come to the gold silver, you can see gold keeps climbing against silver. Hasn't changed. It's 86 ounces you now need. And the silver's got 3 days in a row under the Bollinger Band at this point. Will it embed? It probably is going to. And that means on rallies, you want to get bearish in here too. We have the 100 under the 200 day. See the gray line right through here? And the 18. So we have the classic bearish moving average setups in them. Then we go to the copper market. You fell back to the Bollinger Band. All you did is come up to what I call that line in the sand, failed, came back down. Now remember, it is Golden Week in China, so you're not getting a lot of information out of them. People are on vacation. Keep your ear to the stone. You want to hear what's going on here, because soon you're going to hear things about their property market. And I don't know what it's going to be, but I'm sure we're going to do that. And in the platinum, the pressure is on the market. Will it grab hold of the lower band the way that the silver market did, or the gold market early, the gold market actually right now, and start pushing it down? That's the question that I don't know. On rallies, I see strong resistance at 911.80, but let's face it, that's $43 higher. That's a big rally if the market can do it in an oversold market. And then we get to the cause of all this. The dollar index is just saying super strong. It's got bids galore over and over for U.S. debt instruments as other economies get scared. Now, does it really matter if the Fed stops raising rates if the Treasury keeps going into the market paying more and more and keeps offering longer-term rates? The answer is no. The Fed's the long-term deal. The Treasury is issuing all kinds of deals, but they'll probably try to stay as short-term as they possibly can to not lock in crazy, crazy rates for themselves, because how are they going to pay them down the road? That becomes the issue. The issue is because the U.S. refuses to balance a budget. We have to fund our deficit spending, and in order to do that, we need to float more debt. Floating more debt builds, we got to pay that debt. It's credit card payment, think of it that way. And as you keep doing that and spending more, you're spending yourself into oblivion. America needs to do something, and just possibly this is a wake-up call for everybody that Speaker McCarthy could get nothing done. Of course, he was doomed when he put together the deal that he did to get his speaker position. You can't do those type of deals where one person can call a vote on you. It's the first time I've ever heard of any of that. That person called the vote and he won. Of course, he had great help, and he doesn't say that, from the Democrats that just stayed and they voted along their party line. And he got, 8 Republicans to vote, Mr. Getz, and that was enough. So the speaker's out. Could he run again, by the way? He could. That's the crazy thing. He can actually throw his hat in. I pray he doesn't. We need to get new face there and see what's going to happen. If he wants to help that person, great. Now, in these markets, because they're wild, you want to get every tool you can at this point. So when you click any of these blue sections, if you go to our website, iraepstein.com, free offers, each one you click puts it into a cart, then you fill out the email address and your name. We ship everything right to you. You want to get the price counts. We're putting out so many of them right now because these markets are so important. You want to look. You want to see the bond one we just did today. It is shocking how much further down, if you go for what we call a fourth count, the market can reach to. Is it an extreme? It is. Could it be prevented? Only if we do something in our economy to prevent it. Otherwise, you're now setting in. What would you think when I tell you, as you look at all this, that the Dow loses all the gain for the year? Wouldn't you have thought this a strong market? Everything keeps going. When you put everything in, this is what you'll be asked to fill out. As you fill it out, boom, it comes to you. How do you get it? You can move your cursor up to the top up here. You can go to iraepstein.com if you want. Takes you with the cursor right there, and away you go. I'm Ira. You have a good day. I'll see you in the morning.